because she's saying, GDP is a misleading measure of growth. We shouldn't depend on GDP to measure the growth of our economy. There are a lot of other issues that can play part and can indicate whether the economy is growing or not. But world over, Africa, Europe, America, all these countries base their development, their growth on GDP. Probably we need to invite her in here so that she can explain her arguments.
Exactly.
Yeah.
That would be good. Yeah, go ahead. Yeah, I mean, I want to talk briefly about the currency market. Like, we have been looking at how the shilling has really been going down. I want to take a very short time to discuss about the trends in the shilling market. Now, Bank of Uganda midweek last week was able to pump a sizable amount of dollars in the currency market after overnight rates had touched a record high of 4,000. We are now seeing it moving to 3,500.
I said so.
And you said it last week?
I said by the end of this year we'll be on the mark of 4,000 shillings.
So the near-term forecast for the shilling has primarily been driven by fundamentally many factors. We have been seeing ballooning current account deficit has been going up. Until improvements are seen in this regard, the unit is likely to continue weakening, just like you made that good intelligent analysis last week. And then we have other factors which have also added to the negative sentiments, like the growing fiscal deficit and the dollar strength. And actually, Professor Mutembule spoke about that.
I like the way you call him, Professor Mutembule. He's Professor Mutebire.
Mutebire. So that's what we have briefly about that. And then we have the June central bank rate, which is still at 13%, which was still carrying on. But we are going to look at the forex rates in regard to a nice topic you said. Does Uganda need to rethink the liberalization policy? Where did the bank go wrong? So we shall look at the interest rates as well.
And of course, experts are asking themselves, is full economic liberalization still relevant to Uganda?
And President is one of those people who has a thought.
He openly addressed this in the nation address. He delivered this very, frankly. But of course, due to the fact that he was disappointed by the sell-off of UCB, and of course, a lot of government companies have dwindled due to the fact of privatization. And probably capitalization won't be an immediate solution to the situation we have. Because at the moment, this theory, the free market theory, it brings about less regulations. Government is very reluctant in terms of regulating the market prices, the market itself. And we already see trends going up and down. The fluctuation of trends is due to the fact that it's a free market. Even when the central bank gives a directive and lowers its interest rates, we still see some banks, rigid.
Still carrying on with the high interest rates.
Why? Because it's a liberalized economy.
We shall talk about it in details as we go to rethink the liberalization policy, and our focus will be at the banks.
Yes, it should be at the banks, but at the same time, before we even get into the capitalization of the economy, we really have to think strategically. I'm glad that Uganda Development Bank is now going to be owned and ruled by the government itself. So let's see how that goes. And then probably that's when we can take that step of shifting from the liberalized economy into the capitalized. But of course, some of the issues that have affected the state of the economy is the fact that standardization of prices, of course, has been key. And, the private sector has also played a big role in the collapse of government institutions.
How do you explain that to our viewers?
Well, one, you can say UCB, it was given an opportunity to actually rule and govern and manage a government institution. They sold out. They thought that probably as UCB buys into the government in the area of privatization, that the interest rates would go down. But we kept on seeing the interest rates going up. Remember, UCB had about 25 branches within the country. A lot of microfinance.
It was covering
exactly. SACCOs were investing with this bank, but we still saw the interest rate side. And the government's intention of privatizing UCB was to bring down the prices. We didn't see that. That's
And
a very good explanation.
The president recently was asking South Africa why he was able to privatize Uganda Commercial Bank. And the reason he said he had recommendations from IMF. And the reason they gave was interest rates to be low.
But then when you said the recommendations from IMF, it looks like also the World Bank was discouraging privatization. That is one of the regulations if you want to receive donor funds.
They were not discouraging privatization. Actually, the IMF and the World Bank were pro-privatization. That's why you see, we were able to see most of the government multinationals
But now
being
that it has
privatized.
failed,
Yeah.
what next?
Those are some of the economic indicators that we need to look at in order to see that our economy really
Because I'm
grows.
pretty sure if prices are standardized, if there are rules and regulations to govern the market trends, I'm pretty sure that in the near future we could see the shilling stabilize. We don't really have to depend on of foreign donations, and we also don't have to much more depend on the foreign markets like in the area of exports all the time. Imports, buying things from abroad to be able to to maneuver through our trade in this country.
Actually, when you look into the Ugandan economy and the government of Uganda, Uganda is one of the best countries in Africa with the best policies. Maybe the processes can come on board when we are looking at the implementation processes, where some of these policies effectively implemented. And if they were implemented, were they producing results? And if they are not producing results, what are the key failures that the government needs to address? So those are some of the few things that we shall look on when you're able to analyze the economy.
Probably next week, I'm hoping to bring someone here from the central bank to actually analyze more on this. But one thing I noticed that when the central bank lowers the interest rates, according to the state of the economy, it's left to the banks themselves to determine whether they can lower or not. Now, the only solution there that would actually trigger a bit of change is the competition. Because people will go for where there is value for money. If one bank is at 22% interest rate and another is at 18, 20, of course, choices will be consumers and subscribers to these banks will have to make the right choices.
Actually, let's have a look at the rates. When you look at the banks, we have Stanbic having a percentage of interest rate at 22, Barclays at 22, Standard Chartered at 21.5%, Centenary Bank at 21.5%, Crane Bank at 24%, DFCU at 22%, and then Bank of Africa at 23, Diamond Trust Bank at 21, and then we have Citibank at 24 and Housing Finance at 22.
Now you can
look
see
at
that
KCB at 21 and Orient Bank at 22.
Now you can see
now
that
the highest bank, the highest
is 24.
is 24 with Citibank and Crane Bank. And the
another
lowest,
reason they are giving?
Nope.
That prices or the interest rates are determined by the movements of the central bank. But if the central bank has increased by a very slight percentage, why don't you follow the trend? And when they decrease, why don't you go down? Because right now, the central bank...
the central bank rate is at 13%. Yeah.
Yes. If you quantify 13%, let's say to the 24, how much profit is there?
They're making profit. Remember last week on Thursday, we made a discussion about this, that the fall in Uganda shilling against the US dollar, to a certain extent, is a viable